This is regulation time. This is the time today where you've got a lot of zoo animals, and finally the cops have realized that they're running all over the place and they're trying to put them back in their pens. Regulation is coming whether people want it or not.
All right, welcome back everybody to Altcoin Daily. My name's Austin, here with my brother Aaron, and now friend of the channel and returning guest, Douglas Borthwick, CMO at INX Limited. Douglas, thanks for coming on.
Hey guys, thanks for having me on. It's really good to be here.
It's crazy because you were actually one of our most requested guests to come back onto the program. And I think that's sort of because of the perspective and the history in finance that you bring along into cryptocurrency. So could you just sort of give us a reminder of your background and then also jump right into the question, are we on the verge of a new regulatory era in crypto?
Wow, that's a lot there. Let me tell you my background. Background was Carnegie Mellon University, then business school at Yale University, where I did a master's in public and private management. After that, I then moved on to Morgan Stanley, 10 years there running foreign exchange derivative trading desks in New York, Hong Kong, Tokyo, and London. Then I moved on to running proprietary trading at Merrill Lynch. I ran Latin America for Standard Chartered. Then I went to a company called TPI Cap, and I built a company called Chapdelaine FX. It was the largest FX ECN. I left there about 2.5 years ago to join a guy called Shai Datika at a company called INX. I'm now the chief business officer there. And my job is to go out there and find the deals that make us move on to that next level. Now, regulation, look, this is regulation time. This is the time today where you've got a lot of zoo animals, and finally the cops have realized that they're running all over the place and they're trying to put them back in their pens. Regulation is coming whether people want it or not. Now, we saw this 2 or 3 years ago, and I guess you could think of us as being like Noah's Ark, in that we were building something and everyone was looking at us saying, you guys are crazy. What are you doing? Like regulators, don't worry about those guys. And we said, no. We spent 3 years, 950 days working with the SEC to create something that really gave regulatory power or showed what a security token could be if it was a full registered security, like Amazon, but now trading 24 hours a day, 7 days a week. Now, we spent all of that time doing that. And at the same time, companies like Binance ran out the door and said, look, we're going live. We don't really care what the regulators think. We're offshore. You can't touch us. Now, the thing about regulators is they can touch you, and it doesn't matter how long it takes for them to come after you, they will. They'll always get their man. And the way it works is, there's an anonymity when it comes down to crypto, and that's something that everyone sort of treasures, but at the same time, it's not treasured by regulators. Regulators like to know who owns what, where, when, and how, and when did they buy it, and when did they sell it, because they like to, charge you taxes. And so what we call a wallet today in traditional finance is called an account. And it'd be crazy to think you could have a bank account that the government doesn't know about. Well, that's essentially what an electronic wallet is. And I think that now what you're finding is governments around the world have finally woken up and realized that that's what wallets are. And now they want to know who owns which wallet. And so they've got a number of different ways that they can, can put pressure on a crypto exchange to be able to give up this information. Because crypto exchanges mostly have what's called on-ramps, fiat on-ramps. And that means that, you've got banks in the UK that allow their users to put sterling onto your exchange. You've got banks in Europe that allow you to put euros on your exchange, which you can then exchange for Bitcoin or Ethereum or whatever, or altcoins. Now, as the regulators start to squeeze an exchange, they turn around to all of these on-ramps and they say, look, that's not going to happen anymore. You got to stop this. And then you'll find that the exchanges that are living on the margin and offshore start to get squeezed more and more because the oxygen or the lifeblood of that new money coming in from fiat on-ramps is now taken away. And the only way they'll have new money coming in is if someone transfers over Bitcoin or Ethereum or USDC from their wallets that they have today. But it's not just that. Think about the companies that have run out the door and posted every utility token that's ever come through. Now, utility tokens have been largely unregulated. There's a couple that have gone through NYDFS, like stable coins, but most of them are unregulated. And when you look at the hundreds of thousands of altcoins out there, some of them are protocol coins. I buy that. That is a utility. But some of them, people bought with the understanding that this was a sort of a security, but just wasn't registered, regulated, and they didn't have to go through KYC or AML. And that means know your customer and anti-money laundering. And these are checks that have to be done if something's a security. Obviously, XRP has come under the spotlight for this, where they did a huge sale of something that the SEC decided may be a security, and Ripple is arguing actually it's not. But that's just one company. There are hundreds of thousands of companies out there that have raised money. And you've seen the ICO craze that happened back in 2018, and how many of those companies then had folks ended up going to jail or had to return money back to investors. It's pretty obvious to us that the way forward is going to be through full registration with the SEC in the United States if you want to list and sell tokens to Americans. Now, that being the case, that means that probably half or even more of the current utility tokens in existence, and I think that SEC's Gensler has mentioned this already, would probably be seen as being security tokens by the SEC. But that doesn't mean that suddenly I would pick them up and I would list them on INX, because we can do that with a digital broker-dealer's license. Really what it means is that these companies would have to swap the tokens that they have right now for a security with the individuals that own them. And that could take a long, long time. And so, I think that there's a lot of fear in the market. What does this mean? Well, if altcoins right now that aren't registered make up a significant amount of a exchange's revenue, that could be problematic for that exchange. If an exchange that is not a registered broker-dealer for digital assets or an ATS does not have that registration, but for some reason is listing a coin that the SEC sees as being a digital security, well, that's a problem for that exchange because they haven't been registered. It's sort of like me setting up a website and I'm selling Amazon stock directly to the public. Everyone knows that that's not legal. And yet there's been some crypto exchanges that have thought that that's fine. So, I think that there's sort of been an awakening lately of the regulators where they have now decided on a global scale to start thinking about, who are the bad actors and how do we stifle what they're doing? And I think that that's what you're seeing now, where you're seeing a number of exchanges sort of getting pushed apart, or slowly. It's almost like, death of 1,000 cuts, where every day there's more and more news coming out that tells people, you know what, you ran out the gate, you were the hare. You ran out the gate, certainly you've got lots of money, and now you're staffed by lots of people that used to work for the SEC or the DOJ or any of these institutions. But the fact of the matter is you can't run from the law.
I like it. That's a very good perspective. I guess just my follow-up on that is, well, what do you think is like the most exciting part about institutions coming into the space, if you had to say something?
Well, here's the thing. Institutions only come into this space when it's cleaned up. The institution only will trade with an exchange that's gone through the rigorous needs that the SEC and others, bring to it. And so that certainly is important. But, one institution can do one trade that's equal to 50, 100,000 retail. And that's where it gets really exciting. And you're already seeing that, I think, in the movements that we're seeing in Bitcoin today and Ethereum, where you've got a number of institutions coming in and using optionality to trade. And they can buy what's called gamma, which means that they've bought the downside and the upside in something. They just want to see volatility. How do you get volatility? Well, in the currency markets, you would put in huge offers or huge bids in the market. That would then squeeze the retail that we're using 30, 40 times leverage. And so obviously the price would move in the way that you wanted. And I think that's what we're seeing today. We're seeing some really big fish enter into some ponds that only had really small fish. And when the big fish come in and there's only one or two big fish, well, then things start to move. And I really believe that that's what we're seeing these days. When other big fish come in, well, then they start marshaling each other and they start having positions on the other side from each other, and you see much more calm movement. But one thing for sure is we're going to see volatility in this space for some time until governments get it. And you can look at volatility in fixed income and equities and currencies. It's always good volatility, and then the governments come in and start intervening in some way, and volatility absolutely collapses. So volatility starts to go down as you go from the little guy to the bigger guy to the bigger guy and then to the biggest guy. Now, right now you see Bitcoin moving up and down because it really is, it's the purview of the little guy, the minnow. But soon we've got the mackerel coming in. After the mackerel come the sharks. After the sharks come the whales. And that's when we're going to see volatility collapse. But that's, 5 years time. Right now, there's a lot of sharks and there's a lot of minnows. And so we're going to see a lot of volatility. But I do believe that, as you can see, if I was just to chart how many people watch your show, and I was to chart that against how many people are getting into crypto, it's probably very similar. There's a huge amount of adoption that's happening. I'd say over the last year, it's probably doubled the amount of adoption of Bitcoin, of crypto in general. And as adoption rallies and raises, and people become more aware of it and start getting involved in it, you'll obviously then start to see the price moving in one direction, which it has done over the past 10 years.
In your opinion, is there room for both? Meaning that Uniswap, decentralized exchange, at one point was doing more volume than the centralized exchanges. And also, as examples, blue chip DeFi altcoins like AAVE and Compound, they're adding versions for institutions, permissioned KYC versions.
Yeah, I think that DeFi, just by the name, decentralized finance, is sort of the opposite of the way that the government likes things. They like things to be centralized. You can go to one guy and say, okay, what's going on? They don't like the idea that one person can go into something and then anonymously lend with leverage to someone else. That seems to be a bit of a problem. But there are solutions that are coming. There are solutions that are coming that will allow many anonymous people to remain anonymous, but at the same time deal with other anonymous people, but they've all gone through some sort of KYC before they became anonymous. And so it's sort of like, DeFi, Uniswap was first out the gate, and now it's getting refined and pulled back a little bit so that we can match what the regulators want to see. Look, I think we all know that smart contracts are going to end up being the be all and end all. When I think of how an ETF is traded today or a mutual fund is traded, the number of people involved in that sort of space, and yet when you can just change it with a couple of lines of code in a smart contract, that obviously is going to become the future. And there's nothing that's going to stop that. But what will stop will be the ability for someone to anonymously go out there, lend to someone else that's anonymous, and the government have no knowledge of this whatsoever. I don't see that being a long-term situation.
But how is it anonymous if there is a version of KYC?
Well, it won't be, but right now when I give money to Bank of America and I put it in my bank account and I get my 0.25%, Bank of America lends it anonymously to me to someone at 18% that has a credit card. Now, we're all sort of anonymous there. I don't know who that guy is that's paying the 18% on the credit card. I know I don't get that 18% because I only get a 0.25%. With DeFi, I get that 18%. Right? Because of that anonymity layer. Now, Bank of America can have an anonymity layer there, and that I don't know who I'm lending it to. They don't know who they're borrowing from, but they charge 18% for that. And I'm thinking that we can probably find a way that maybe it's only 17%, or maybe it's 1% that's charged rather than the whole 18. Because regulation costs money, but so does waste. And one thing about DeFi is it strips out the waste, and all of the office buildings, all of the bricks and mortar, it takes it all away. Now you're going to have to add in some sort of pricing mechanism to add in the KYC and the AML. But you know what? If I get 1 million people on one side and they all do KYC AML, and 1 million on the other, they all go through KYC AML, they're all anonymous with each other when they play with each other on my sandpit. So there is anonymity there, but you've got to join that centralized exchange in order to do the decentralized finance. And I think that that's where it probably is going to go.
Douglas, I hear what you're saying, and I think that might make a certain percentage of our audience a little peeved that, there's no way without decentralized banks.
Well, there will be way. I mean, look, DeFi will go the way of offshore. Much as, I think that a lot of things will end up moving offshore. There's a lot of things you can do outside the United States that you can't do in the US. Take, for example, tokenized equity that's pitched right now by a lot of firms outside the United States, where they say, look, we've got tokenized Tesla. Well, here's a newsflash. It's not really tokenized Tesla. Tesla didn't issue this. Really, it's a CFD, a contract for difference. And CFDs are essentially derivative instruments that are matched to something else, to the underlying. But you don't, you don't, what you get is you get the same kind of price movement in it, but you don't actually own a fraction of that stock. And CFDs are illegal to United States citizens. And so when you hear about these types of things, it's sort of like, yeah, there's some great ideas traded outside of US borders, and people will move to that. Not everyone wants the government to know that they own this Bitcoin wallet and that they've registered this Ethereum wallet. Not everyone wants that. But, so a small minority, I think maybe, 20% will say, you know what, screw this, we're moving offshore. But they're going to be replaced by every single institution in the United States that absolutely dwarfs that 20% minority today. 20% of the retail business that we see, and think about this, right? There's $1.5 trillion market cap right now in crypto. If you were to take, let's say, 20% of that market cap, what is that? 300 billion? $300 billion. How does that compare to $100 trillion of equities? $100 trillion of fixed income. When the institutions get involved, these numbers are huge compared to the de minimis size right now that we're seeing in crypto. Wait till I start bringing foreign exchange onto a crypto trading business that we're doing with the yen stablecoin. That's going to be 24 hours, 7 days a week trading of the yen. And you know how much dollar yen trades on a nightly basis? All you see in dollar yen on a nightly basis, this is my power going out. All you see in dollar yen on a nightly basis is around $800 billion a night. And you see around $30 billion a night just in Bitcoin. What I'm saying is these other markets are going to absolutely dwarf what we see today in crypto. It's going to be a tsunami. And when that tsunami comes, the guys that are going to profit from that, I believe, are going to be the ones that are actually registered and following the law.
Interesting. I like it. I guess, in summation, we've kind of been talking about this, but my final question is first of all, trying to predict 4 years ago, trying to predict where we are today would have been almost damn near impossible because so much has changed and so many things have happened. But just looking 10 years into the future, so multiple cycles ahead by 2030, in summation, how do you see the space changing? And also regarding Bitcoin or Ethereum, do you think they'll still be around? Do you think they'll appreciate?
Sure. Look, I think that Bitcoin is today's digital real estate. It's something that everyone can afford to buy. And at the same time, over the course of a lifetime, I see appreciation. Our grandparents bought townhouses for $500 in Manhattan. And over time, today, maybe it's worth $20 million, that same townhouse. It wasn't because real estate went up, it's because the dollar went down. Now, there were times in the 70s when the price of real estate or of a townhouse in Manhattan collapsed. There was fighting on the streets, electricity going out, and people sold their townhouses. They said, oh my goodness, townhouses are the worst investment. But if you'd still held on, if you hodled your townhouse, you'd be worth 20 million today. And that's what we're seeing in these cycles. You see a lot of FUD and people sell out their Bitcoin and think, oh, that's it, it's all over. But it's not. The dollar's still going to get weaker over everyone's lifetime. You just got to increase your time horizon. Now, Ethereum, I see that as the gasoline of the economy, especially for a lot of coins that are going to be running on the Ethereum network. And I know we all say that Ethereum network's very, very expensive today, but I do believe that ETH2 is going to make it a lot cheaper. And technology is going to make these rails a lot cheaper too. Now, I like the idea that you're seeing from guys like Algorand of putting the smart contracts on the chain. And so you see less of this sort of clunky movement of a token carrying a smart contract as opposed to the other way that you can do it. So I like that idea too, and I buy into that idea. But I think that in 20 years you're going to have tokens running on Ethereum, tokens running on Liquid, on Algorand, on Avalanche, on Hyperledger, all sorts. And they're going to specialize in different things. Maybe Hyperledger just specializes in real estate. Maybe it concentrates on stable coins issued by governments. But we're going to find all of these different rails, and companies like myself that have a security token marketplace are going to have to be able to accept all of these different rails to run all the different types of tokens that run on them. I think that in the next 5 years, all equities in the United States will be digital and will run on the blockchain. And that's based upon just conversations I've had in different types of corridors. I think that fixed income is certainly moving there as well. You know, the thing about the blockchain is you can be calculating interest on a per second basis. It's not just about let's do quarterly or let's do monthly. And that'll be exciting, I think, for folks to have that sort of liquidity. But when I think about just, you know, technology in general, email, you used to be happy with snail mail, right? Sending something to the UK, you send a letter, 2 weeks it gets there, you're happy with that. Nowadays, we've got email and we want to get it instantaneously. We're used to that. Packages, we used to think, you know what, it's okay in 2 weeks. Now we get Amazon, we get it the next day. But for some reason, for the last 100 odd years, we're happy to get our equities delivered to us in 2 days' time. Forget about that. That's just, it's old technology and it's going to change, but it's going to change so quickly that if you're not standing there with your hands out, you're not going to catch it. Because it really is one of these technological marvels, kind of like internet, right? Remember when the internet came out and people said, you know what, that's just for pornography and it's for thieves. And they're saying the same exact thing about crypto. You know, blaming crypto for if someone gets kidnapped, blaming crypto if there's a ransom. Well, let me tell you, ransoms have been paid for many, many years in euros and in sterling and in dollars. So we're not changing the game here. But what I will tell you is in the next 9 months, you're going to see US banks start to offer digital accounts. So you can start sending USDC from yourself to your friends instead of doing a wire transfer or a SWIFT or an ACH. That's going to be huge. And that's already being pushed by the OCC, the Office of Comptroller and Currency. When they open that up and they start giving you a digital account for you to have at your bank, that's when all this stuff's just going to take off incredibly.
Wow. I love that perspective. And I think that's a great segue in our final few minutes. Would you remind any new cryptocurrency investor, new or old, what INX or INX is? Please remind me. And then how they can get involved.
INX. INX is a couple of things. The first is we did the first ever security token IPO on the blockchain, and that's a full US registered security that trades on the blockchain. We IPO'd it back in August. I think we raised around $93 million doing that. We sold to 7,350 people from 75 countries. And by the end of this month, and we'll update in the comments section when we have the exact date, but within the next couple of weeks, we're going to be listing this token for the very first time. This is going to be the first ever traded US security on the blockchain. And I think it's pretty historic because I think it's a new asset class. This will be a US security that trades 24 hours a day, 7 days a week, 365 days a year, just like crypto, but it's a registered security. Now, what does that do though? Well, what is INX? Well, we sold this token because we wanted to give 40% of our profits or net operating cash flow to the guys that buy it, the holders of it. And what is our business? Well, we've got a crypto trading business where you can trade crypto back and forth all day long, a security token trading business where we'll be listing a lot of these utility tokens that'll become securities, but also a lot of securities. And on the back of that, we've also got a business. We just bought an interdealer broker in Israel, but that's registered in the US. And that's going to allow us to offer NDF trading in crypto. That's non-deliverable forward trading in crypto to institutions. We've got about 50 tier 1 banks that will be trading that with us. And the reality is we're a nose to tail digital assets company. Whether you want to trade NDFs, whether you want to trade crypto, whether you want to trade digital securities, we want to be that one-stop shop. And the nice thing is, when you trade on our platform, 40% of the profits go to the token holders, not to a couple of wealthy twins.
That's awesome. Douglas, thank you for coming on. Any final message for the Altcoin Daily audience?
Well, look, I think the Altcoin Daily guys are fantastic. I love being on this show. You guys, I think, do a really good job in explaining a lot of, I think, complicated issues to your listeners. And kudos to you. Congratulations on your success.
Appreciate it, Douglas. Thanks for being on.
Thank you very much. Thanks for having me.